Welcome to the Delaware Mortgage Rate Weekly Mortgage Market Update for the week of December 30th, 2013. Hello, I'm John Thomas with Primary Residential Mortgage, here to give you your update. Well, last week, Delaware mortgage rates did drift higher. If we look at the bond chart on the screen, you can see that the long-term trend for mortgage bonds is to sell off and move lower, which is going to move interest rates higher. But if you look, we did find a level of support. Bonds bounced off that level of support on Friday with the green candle. So short term, we might be looking for the bond to move higher. So we could get a little reprieve and interest rates could dip slightly. But the long-term trend is still, as you can see, the big red arrow is for mortgage bonds to sell off, interest rates to move higher. So we are going to recommend in the short term to float your Delaware mortgage rate to start the week to see if we can recover from that bounce higher on Friday and maybe get a little bit better rate. But if bonds sell off and break below that level of support, we would quickly switch to a lock-in stance because they got a long way to go, and the trend is for lower bonds, higher rates. So let's dig into the news. Big news in economic news, the stock market set its 50th record high this year. The S&P index closed on Thursday at 1,842.02. So that was the 50th straight record high this year. So unbelievable stock market rallying. The market's been rallying on an improving economy, improving housing market, and the Federal Reserve pumping money into the economy through their asset purchase program called QE3. So all of that has just rallied the stock market, one of the best years we've seen in a long time. And then other economic news, on Thursday we saw the release of the weekly initial jobless claims, and that did come out better than expected. The claims dropped by 42,000 claims down to 338,000 claims for the week. Now, the initial jobless claims have kind of been all over the place, and that's because we're in that holiday hiring and firing season. So we're not going to get a good reading until that season's over into January. And then in housing news, we got a new director of the FHFA. His former Congressman Mel Watts has finally been approved for that position, and he basically said he's putting a hold on increasing the fees for conventional loans for Fannie Mae and Freddie Mac, which was supposed to go into effect in March 2014. So that fee is called the G fee. They were going to increase that, which would increase mortgage rates, because the way they make consumers pay for the increased G fee is they increase the interest rate. So put that on hold, so that's a good thing, so we won't see rates spike higher because of that this year. And then also the Federal Housing Finance Agency released their home price index for October 2013, and it was slightly better than expected at 8.2% year over year, which was up 0.5% for the month. And then the Mortgage Bankers Association, the MBA, released a summary of the FHA 2013 report, which showed the mortgage insurance fund continue to improve, the net worth growing by $15 billion over last year's estimate, rising from, get this, was negative $16.3 billion 2012, and we're only negative $1.3 billion in 2013, so we're going to turn positive next year. The capital reserve ratio went from negative 1.44% to only negative 0.11% for 2013. So again, we're going to be positive in 2014. The mandate is to be at a capital reserve of 2%, and projections are we should hit that in 2015. So FHA definitely doing much better, definitely on the right track, so it's definitely good news there. And then we saw new home sales for November 2013. They were reported actually down 2.1% from October's numbers, but October's numbers were actually revised higher, and they came out, when they were revised higher, they were the best number since July of 2008. So they were revised higher to 474,000. And then November came in at 464,000. So even though it was down 2.1%, that's still a great number. Also in the report, the supply of homes remained very tight at a 4.3 month supply. So if you're out there looking, inventory is low, and that's been reconfirmed. And then the median home price was $270,900, which is up 10.6% year over year. That's a nationwide average. In the local news, the next free first-time homebuyer seminar is in Dover, Delaware. That is Saturday, January 11th. And that is from 10 a.m. to noon, and that's at the Holiday Inn in Dover. And then the next one in Newark is Saturday, July 18th. That's at the Christiana Hilton Hotel in Newark, Delaware, from 10 a.m. to noon. You can register for either one of those events by giving us a call to the office at 302-703-0727, or you can register online, www.delawarehomebuyerseminars.com. Look forward to seeing you guys next week.